Hello, this is Joe Slezak, Director of Marketing and Business Development for H2R CPA. Thank you for joining us today. The Q&A session will occur at the end of the presentation. We have tried to answer as many of the pre-submitted questions as possible during the presentation portion of this webinar. Please use the chat feature to submit your questions to me by selecting Organizer as the recipient of your question. You may submit your question during the program or wait until the end. Please note, since this presentation is being recorded, specific questions which contain identifying information will be filtered to protect our audience. I will now turn over the presentation to Ed to start the program. Thank you.
Thanks, Joe. Good morning, everyone. Hope everybody is doing well on this first, yellow day of opening from the governor. And we appreciate your time and attendance here. And as we go through this, some of the financial availabilities of the PPP loan, Jeff Wolstoncroft from our firm will be speaking about that next. And we'll have more information regarding that. And then as far as the insurance and such, we have Laurie Kuzneski from Kuzneski Insurance Group, and she'll be speaking to those things. And then as far as the development side and fundraising, we have Kate McKenzie from the Pittsburgh Foundation, as well as Amy Razem, also from the Pittsburgh Foundation. So they'll be talking to you as with respect to fundraising and getting engagement from your current donors, and to get engagement from those that are not presently involved in your organizations. And to just get into it, we're going to start off with a quick little statement of the state of the nonprofit sector for small to medium-sized entities. As all of you who are in the sector and in the throes of this pandemic are going to well know that this is a very challenging time. Some of our constituents have had a better round, if you will, of fundraising because of their need, things like the food bank and entities of that sort, whereas arts and those types of organizations are really struggling and such. People can't get out to do things, people can't get out. So the changes also to the taxing structure and such have maybe left a lot of people out with respect to contributions and such from the general public. So with that said, a few items that we're going to look at least to present quickly are, for some of your smaller donors, there will be a $300 above the line deduction for cash contributions made in 2020. And the group will, or I'm sorry, the IRS and everything allowed this to be an above the line deduction and everything. For your larger donors for 2020, there is an increase in the amount of charitable contributions that they can deduct against their AGI. And that increases from 60% to 100%. Now, these are just for cash contributions and alike that happened during the year of 2020. Donations of appreciated stock or contributions to donor advised funds do not qualify. So with regards to your board and your operational concerns, organizations are really going to need to lean on their boards along with their current management team. You want to make sure that the group as a whole is focused on the mission of the group and is getting that mission statement out in various platforms. And the other panelists will be able to speak to that in using these other platforms, whether it's various social media platforms. One of the things we have to consider for an organization is, are you going to be a hibernator, a responder, or a combination of the two, or a hybrid? What this means is that for some organizations that are not going to be able to perform their functions and be able to get out there into the public to do what they do, they may want to consider hibernating. They may want to consider cash conservation and those types of things. The others that have more visibility due to the pandemic, things like the food bank, they're really a responder. They're getting grants, they're getting monies, they're getting contributions in there, and they're out there, diligently performing the duties that they have. If you're somewhere in the middle, you may want to be a hybrid. We want to keep our mission, our focus, our statement out there, but we may not be able to perform our actual services. As we said, you want to look at conserving cash and reducing expenses, and you want to look to the future, and you want to be able to plan out, that's going to be very difficult. We don't know what the next 2 weeks, let alone the next 6 months, holds for the economy or for the organization. Then the last part is, as far as your service provision and such, is what can you do from a social enterprise perspective? Meaning, what can you do to generate your own income and not be as reliant on grants and contributions? Are there things that the organizations can do to generate effectively their own income? The concept of virtual support, we've had a number of clients that have been able to really use different platforms to generate support, get the message out, whether it be YouTube, Facebook, the different functions. And then, do you need to look at changing or adding to your value proposition? And part of that could be just telling the story and being able to get out into those out into the world and letting people know what you do, how you perform it, and what the functions are. So that's sort of a short overview and brief, and I'd like to hand it off to Jeff to talk more about the PPP loans, which is the payroll protection loan that came through with respect to the CARES Act. So Jeff, take it away.
Thanks, Ed. Just wanted to start covering, we're going to talk about mostly the PPP, but Congress had passed two major bills to provide stimulus during the COVID-19 crisis, and with most people in the country were quarantined, and businesses were forced to either reduce operations or shut down completely. So the main program that you may have heard about is PPP. It's been all over the news. It's probably the program that affected most businesses, and especially in the nonprofit world, since it's one of the few times that SBA has opened up lending to nonprofits and charitable organizations. So every nonprofit that's a 501c3 is available to receive funds. And as of last week, with the last published data from SBA, there was still $120 billion in funds remaining. So it seems like there's still funds out there. The loans that are being made are much smaller than they were made in the first round of the payroll protection program. So if you haven't received funds, or if any of your nonprofits that you work with haven't received funds, it's a good idea to explore the option. It's designed to help pay your employees during an 8-week period after your loan, but just to kind of cover some of those costs for the period of the shutdowns in many states. But during this past week, we got some new guidance. There's been a lot of media coverage over some of these larger loans. So the SBA administration came out and said they're going to review loans over $2 million. Any loans under $2 million have been safe harbored in. So there was a big question on the application on economic need. And so basically the SBA is saying, if you had a loan and it's under $2 million, we've safe harbored you and said, we consider you a small business that's essential, and regardless of your economic certainty, your certification is good. There's no further need to explore or to document whether or not the loan was required to continue operations. So that came out recently, and it's very helpful for our small nonprofits, medium-sized nonprofits, that you're not having to worry about is the SBA and Treasury going to come back in, take a look at your loan and deem if you were necessary or not. So now I'm going to kind of quickly go over a little bit more on the PPP loans. So you apply at your financial institution. Loans are 2.5 times your average covered payroll. It's typically for a 12-month period, but there are some other scenarios that can be used depending on the seasonality of your business. And then with the loans, the biggest part of the loan is if you follow the rules, use the money for qualifying expenses that we'll briefly touch on, it can be forgiven. So the loans will come as a 2-year term loan at 1% interest. And once you get the loan, you have 8 weeks to spend it on what they're calling qualifying expenses. payroll costs, which will be required to be the majority of the forgivable portion. You're required to spend 75% on payroll costs, which is gross wages, health insurance, retirement, pension contributions. That's the employer's share only. You can't use your employees' share to increase expenses because they would already be in your gross wages. And some state and local taxes, as long as they were on the wages that you paid. Then they also cover operating costs, which your operating costs can't be any more than 25% of your forgivable loan value. So, and that's for rent, interest on mortgages, covering real and personal property. In some of your utilities may be covered. We're still waiting on guidance and the definition of what utilities are. Currently, we're kind of advising your typical utilities, electric, gas, water, sewer. We're hoping, cell phone lines, internet, that stuff will be covered as well, because those are, in this day and age, are essential to pretty much every organization, especially in this work from home era. So we're hoping all those are covered. Some other things on the next slide: wages over 100,000 are excluded. So the program was designed to cover the rank and file of a lot of organizations. So it was limited to $100,000. You can pay your employees that get paid over $100,000. The first $100,000 can still be used in the forgiveness, but the amount over $100,000 annual. This is an annualized, so it's approximately $15,000 for that 8-week period. Those wages can still be included. The wages above that just won't be forgiven, and they wouldn't have been in the original calculation of the loan anyway, because the loan calculation was basically the same growth, same payroll cost as we just discussed. Sick leave paid, it was covered by other federal funds. So in the first bill that Congress passed, there was some funds set aside for sick leave if your employee was affected by COVID-19, or whether they were required to quarantine and could no longer be at work. So there were some funds. So if you received funds to cover sick leave for any of those employees, they are not able to be put in the forgiveness calculation. And then the federal taxes paid by the employer on the employee's share. Again, those would be in your gross wages already, so you can't double up on those expenses. There are some items that will reduce potential forgiveness. If you had reductions in workforce, reductions in wages greater than 25%, and again, yes, the minimum of the forgivable fund has to be spent on payroll costs. We're still waiting on guidance. But SBA has come out and trickled out guidance to us. One of the things they said, if you have attempted to rehire your employees and they refuse to return, they won't count against the reduction in workforce. So, in this era, one of the items they put in the CARES Act was an additional $600 of unemployment. So there's a lot of employees that are feeling that they're doing better on unemployment than they would be working, and that's their choice. But so if they would prefer to stay on unemployment and refuse to come back to work, you aren't going to get penalized in your forgiveness calculation for those employees. But you do need to document it. We're recommending having that in some type of electronic format or written format where you can certify that the employee received it. Ideally, you'd want them to sign off to say they refused, but that may not be something employees will want to do. But making sure that you have a trail that you provided that to the employee and that they refuse to come back. What happens if all the funds are not used on forgivable costs? Again, some organizations may struggle to use it all because you have 2.5 times your monthly and you only have 8 weeks to use it. So your normal salaries may not cover the full forgivable cost, and then your operating costs may not be 25% of that loan either. So you may have funds at the end. At the end, if you don't have them all used and forgiven, it'll still be a loan at 1% with a 2-year repayment, and there's a deferment on the first 6 months. So you have 18 months to repay it. You can repay it all in one lump sum. There's no prepayment penalty, so there's really no issues if you don't use it. You just have to repay it. Again, you can keep it and repay it over that 18 period or pay it back in one lump sum. Some considerations you may want to take in account is planning. After the 8 weeks is over, there's nothing really can be done if you didn't spend that money, because the way that we understand it now, it's on a cash basis. So incurred and spent in that 8 week period. So starting to plan how you're going to use that money is very important. We can help you with that. We have a calculator that we put together that we can help you kind of run some scenarios if that's something you need help with. Again, once the 8 weeks is over, as of what we know now, there's not much that we can do. That money will continue to be a loan and will be required to be paid back. But also don't let the thought of free money guide your decisions. Sometimes that loan can be more valuable if you need some operating cash flow going forward. You may be better off holding that money in a loan and using it to cover costs going forward. There's some other federal loan programs that are available. The Economic Injury Disaster Loan, again, that one is open to 501c3s and 12s as the PPP is. There is up to a $10,000 grant, $1,000 per employee that can be requested. Once you submit the application, it can be paid within 3 days. If you receive the PPP, you can't use the EIDL on payroll, and that $10,000 grant will reduce your PPP forgiveness. So if you don't take PPP, the EIDL may be another way to generate some cash flow in this era and have up to $10,000 in form of grant, and that grant doesn't have to be repaid. So your loan after the $10,000, would be what would be turned out. In most cases, we're seeing, there's be a 30-year loan, and I think for nonprofits, it's about a 2.75% interest rate. So again, another way to generate some cash. And then the last program is the Main Street loans through the Federal Reserve, but those are really designed for large businesses that can't qualify for EIDL and PPP. There's some tax benefits through the bills that Congress has passed. The biggest one is for nonprofits, they extended the deadlines for filing. So nonprofits that were due on today would have until July 15th to file the 990s. The 990s can still be extended, but it's not, your 6 months will be from your original due date, not the new due date. So you'll still have to file by 11/15. Most states have followed the deferments, but not everyone. So check your local states. PA did follow the federal time to file and time to pay. Again, as I mentioned, there's some paid sick leave and family leave in the FFCRA, and some other credits up to $10,000. But a lot of these credits, if you took PPP, you're not eligible for. So if you have any questions, reach out to your H2R liaison or myself, and we can kind of guide you through some of these other programs. Some other tax things that may affect donations are the requirement minimum distributions for 2020 were waived. So I know a lot of charities receive contributions through RMDs, where the donor directly directs the RMD straight to the charity, where then they don't have to pay the tax on that distribution. Since RMDs were waived, maybe that reduces some charitable deductions. We just don't know. As I mentioned, there's a $300 above the line charitable deduction. Again, how that's going to affect giving, we don't know. But my recommendation is take a look back when the tax law changed in 2018. How did it affect when the itemized deductions for majority of taxpayers went away? Did you see it declined? If you did, maybe you'll see an increase because people can now, your donors were driven by some of the tax incentives. So again, you have some data you may be able to rely on to see, is it going to affect you or not? And then the final thing is the removal of limitations on individual cash contributions in 2020. So the prior cap was 60% of AGI. Now it's there's no cap on those deductions, and Ed had mentioned some of the restrictions where it has to be current year cash contributions. You can't use appreciated stocks. And so I want to pass it over to Laurie at the Kuzneski Insurance Group, and she's going to give you a little overview of HR, insurance, and board engagement.
Great. Thank you very much, Jeff. I just want to give a little disclaimer. One, this is my first webinar. I'm used to standing in front of a group of people talking. So it's the first time I've ever done a speech in slippers. But I just want you to understand I am kind of a generalist on all of these things. I have broad knowledge and experience, but I use my resources frequently. So ERISA attorneys, HR experts, our product experts within our agency. So I think what I'm trying to say to you is make sure that you are using all of your resources as well. And so I'm going to talk about this a little bit high level here. So we work with a lot of nonprofits in our firm, and I work with a lot of nonprofits as a board member and a volunteer. And so what we've seen so far is, when COVID first happened, we had a lot of clients calling us asking about how do we reduce hours, things like that, to try to stay afloat or stay open during all of this. And then, you're all applying for SBA loans, and that's not like grant writing. And I don't know how many of you filled out the application only to find out it was the wrong application. I heard a lot of loud yelling coming from my husband's office that morning when he was filling out those papers. And that was a whole nother process that you had to go through that was new to most people. And then we talked to a lot of our clients about laying off employees and furloughing employees. And one of the biggest concerns was, in doing so, could they still offer employee benefits to them? How could they let their employees know that even though they were letting them go for this time period, it wasn't what they wanted to do. They wanted to be able to bring them back, that we weren't sure, how long this was going to last, all of those things. And so we really spent a lot of time, and it depended on each carrier that they had, did they have to put their employees on COBRA, or could they just leave them on the plan as is, and letting them know that they were still there for them. That was really important to a lot of our clients. And I did receive a question on unemployment insurance and compensation, and that I wanted to answer here, even though it's not on my slide. But I had a question about faith-based organizations. And as I said, I use my resources. And so I reached out to our HR consultants who are researching this, because it is different and these things change every day, which is why I try to keep it high level, because what I knew yesterday can be different today. But the way it works in Pennsylvania, if you are a nonprofit, a lot of you are self-insured for unemployment insurance or for unemployment compensation for your employees. Faith-based organizations are exempt from unemployment. Therefore, their employees can't file for unemployment. Now, that being said, there are other programs out there right now through FEMA and some disaster relief organizations that are paying for that. So I'm going to get a clear picture of how that is all working at this point in time, so that I can get that information out to the person who asked that question. But like I said, these things are changing constantly, and there are new things happening every day that are giving us more options and opportunities. But I will offer up a website that I spent a good amount of time on this morning, the Pennsylvania Association of Nonprofit Organizations. It's PANO.org. That has some really good information on unemployment. And so I think, if you have some time, check that out if you have more questions about that. As we were going through all of these things, we had a lot of new compliance obligations to meet. So the FFCRA, the CARES Act, the extended FMLA. And what we found was that a lot of these contradicted one another. They caused ripple effects into other policies that are out there currently. And so there was a lot of work navigating those things. And again, that, they keep changing. So we are constantly looking for the updates. We've been offering webinars through our ERISA attorneys, and it changes every week. So they update what happened last week or what changed from the week before. So while you're doing all of this and dealing with all of this, you're still trying to maintain your core business functions. Are you, still serving your community and things like that? And so what we found was most companies were trying to do all of this through this crazy time that was changing every day, but meanwhile keeping your workforce health and safety in mind. And one of the, I think, most important things from an HR perspective is that employees were watching to see how their employers handled these situations. So, some employers you heard about just, let everybody go, even though it, shouldn't have been a financial issue for the company. And so there are some people out there, some companies out there that are going to get kind of a bad rap. And in terms of maintaining your team and your employees, you have to be very careful and cautious in how you treat them through this. And if you're not worried about keeping an employee, then go ahead and, behave however you want. But if you are, then I think it's something that all of these actions that we take need to be carefully considered and thought through before we actually take them, because there are a lot of ripple effects on all of them. So right now, everybody is navigating work from home. And my husband asked me what WFH means. So that does mean work from home. And, how do we maintain accountability with our employees? How do we keep our team cohesive? What is our employees' focus like? I have 3 children at home. Somebody is constantly running into my office asking me for something. There are parents who are homeschooling their children, things like that. So our focus is split while we're working from home. And so how do we make sure and manage our employees through these times and make sure that things aren't falling through the cracks, things are still being done? We had to come up with a whole new way of paying our bills because our bookkeeper couldn't come into our office to do it. And so, these systems that we have in place, how are they displaced and how do we fix those moving forward? Now, we will probably continue doing things the way we're doing them now in the future, even when she can come into our office, because it's pretty seamless and it seems to be working better than it did before. So I think as you're going through these things, be looking at all of your processes and seeing how can we fix those moving forward. And now that we're into a yellow stage and we're allowed to, in some cases, come back to work, how do you re-engage your employees? So how do you bring them back safely? At the end of my presentation, there's a slide with with some resources, there's my word, for you. And so the CDC guidelines, there's a link to it there, that those are being updated every single day. I would highly recommend that, and the OSHA guidelines, that you bookmark those, keep them handy, look at them constantly for guidance. I had some clients calling me and asking me, what do I need to do to send my people back out into the field? How do I do this? And the guidance wasn't clear. So I called my state senator, who's a friend of mine, and I said, what does the governor mean by this? And he said, we have no idea. So it's guidance. It's do what you think it means to the best of your ability, and hopefully it won't be a problem. And that's what he told me. So, but follow those CDC and OSHA guidelines. I think they're really helpful in determining what you need to do to keep people safe when you bring them back. And then I've talked to some business owners and nonprofits, and their folks don't want to come back to work. Some of them are making so much money on unemployment that they're thinking, hey, this is kind of nice, and I don't want to come back. You know, there are policies in the FFCRA and the Extended Family Medical Leave Act, your own leave policies. You know, we had a client that called and said, hey, we have an employee whose mom is coming to visit for 2 weeks and she has health problems. So she doesn't want to come into work because she doesn't want to expose her mom. Well, that's not a reason to go on disability insurance, or that's not a reason for her to not come to work. So she can either take PTO or she can take a leave of absence, but an employer shouldn't have to pay for that. And so when somebody comes to you with a request, it's good to have, let me look into that for you, and you get it in writing, you document everything. I think that's really, really important. And it's important that you update your policies. So I've been working on our handbook, and when COVID happened, all of a sudden there were all these new policies that I had to add to my handbook. And so update your policies. Make sure that you have a work from home policy, because if this happens again, you want to be prepared for it. So as you're going through things that come up, employees are going to ask questions. It's like when my oldest daughter comes and says, Mom, can I go do this? I have to say, I'm not sure what our policy is on that. Let me ask your dad, because she's my first and I've never had anybody ask me that question. So you want to make sure that these questions are coming up. You seriously consider, what is our policy on this? What are the ramifications of this? And how do we fit it in with all of the other policies that are out there? And then sure of your processes. So like I said, we, have a new process for our paying bills in our office and things like that. So make sure that you have those processes in place so that things aren't falling through the cracks. On the insurance side, some things to be concerned about. If you have employee benefits, you're offering health insurance and life and disability to your clients and to your employees, and you want to make sure that you have continuity of coverage. So a lot of our employers furloughed their employees, continued to pay for their coverage, and each carrier had different rules around that. There are different requirements based on the product. So disability insurance is going to be different than health insurance. So you want to check with your broker to make sure that if somebody is furloughed and they have to go on disability, that there isn't an issue with doing that. So make sure that you understand the rules around each of your different benefits, and make sure that you're compliant with those rules. Cyber liability is really important. We're finding more and more employees, since they're working from home, maybe they don't have the same firewall set up, or their kids have access to their computer and they can download things that put spyware on your computer, things like that. Remote employees are at greater risk working from home than they are typically when they're in the office. So, we're talking to a lot of our clients about cyber liability. It protects you if there's a data breach, so you have all of your constituents' email addresses and addresses and, amounts that they've donated to you. That information you want to protect. So cyber liability is really important. Another one is employment practices liability insurance. This would cover you if an employee says, hey, I don't like how I was treated during COVID, or I didn't like that you made me come back to work, or, we had a case where an employee, we let them go and they felt like we fired them because they had a baby. The, attorneys laughed when I gave them the pictures of the baby shower that I threw for her. So it's not a question of if, but when. Through all of this, somebody is going to have an issue with how something was handled. They, might feel that being nervous about coming back to the office, it was a valid reason to not come back to the office, and it's unfortunately not. And so having EPLI insurance is really a valuable thing. You know, you pay your deductible, the attorneys come in from the insurance carrier and help fight that case. And while a lot of the COVID related issues, they're saying, you know, person's not going to win, you still have to defend yourself. So that is a very important one. Directors and officers. So this covers obviously your board of directors and officers of your organization. I don't join a board unless it has directors and officers insurance. And, you know, having a fiduciary responsibility to an organization as a board member, sometimes we have to make decisions that are unfavorable to people. So I'm on a hospital board. We just had to lay off 220 people, I think. And that was a really difficult decision to make, but we had to make it. And there were some threats made on social media and things like that. So you can see how, you know, as a board member who's truly engaged, you want to make sure that you're protecting them. And in the Me Too movement and all of that, having directors and officers insurance has been extremely important. The last one here is business interruption insurance. And this is one, you know, if you have a fire and your business shuts down, this is when business interruption insurance would pay. But it's typically not paying for COVID issues. And there are different contracts, so it could be different, you know, depending on how your contract was written, if you have it. And the president is pushing for it to start paying, but it could bankrupt insurance companies. So there's, as of right now, in most cases, it is not paying for this, but it's something to watch because that could change. From a board member's perspective, I sit on a lot of different boards, and I think one of the most important things is that you engage your board. We've talked to a lot of nonprofits who had questions about the PPP loan, and they were calling us asking for guidance. And, you know, a couple of times we asked, well, what does your board say? And the executive directors hadn't spoken to their board about this. So I think it's really important that you engage your board, have them help you define your strategy, have them help you with crisis management. You know, I'm spending a lot of time on extra board meetings right now with the hospital board that I'm on. I'm a trustee at IUP. So a lot of decisions. Do we shut down? Don't we shut down? Do we go online? How do we do all of these things? So engage your board. Planning for the short term as well as the long term. I've actually sat in and done a strategic plan for a nonprofit through all of this, and keep them updated frequently. I get daily text messages from the hospital telling me what's happening, where we are, how many surgeries we're doing, things like that, so that we are in the know. And include your board of directors when you're making difficult and political decisions. You don't want to do these things in a vacuum or in a panic, because I think a lot of us are in a panic right now. So, you know, we're spending a lot of time talking to with other board members and with our CEOs about different decisions that they're making, and having their buy-in, their understanding, their backing, their advice is really important. And then having them included when communicating with key stakeholders. So, you know, we had a board meeting yesterday at the hospital, and they said, hey, we really want you to understand that the hospital doesn't make any more money on a COVID patient versus a regular patient, because that is something that's going on or going around out there. And so it's important, because then if somebody says that to me in the community, I can debunk it and say, you know what, actually, that's not the case. And so using your board of directors in that way to be ambassadors for you in the community is really important. And then use them when you're preparing for the future. So, you know, a lot of people are saying, geez, do we need all this office space in downtown Pittsburgh or wherever? You know, if people are capable of working from home, maybe we should reconsider that. So we're seeing a lot of questions like that being answered. And Jeff mentioned, planning for the future. Using all of your advisors to plan for the future, I think, is really very important. And so I know I'm standing between you and the topic that you're really interested in, as most nonprofits should be, but how to raise money through COVID. So I'm going to offer myself up as a resource. If you have questions, feel free to do that. But in the meantime, I'm going to pass it over to Kate and Amy. Thank you.
Thank you so much. So glad to be here today with you all. And first of all, Amy and I would like to say thank you for the work that you're doing as nonprofit professionals. Your work is the most important during this time, and I don't want anyone to forget that. So thanks for what you're doing. Amy and I are in development and donor services at the Pittsburgh Foundation. So just to give you some context to what we're talking about, we call on financial advisors, estate attorneys, and CPAs every day to work with their charitable clients to help them give money to the causes they care about most in the community. So today we have just a quick agenda for you. I want to be mindful of time, so we have time for question and answer session. But there's no doubt that this is an incredibly intense and difficult time to fundraise, but it's not time for us as development officers and business development officers to go dark with our donors. And I think we're all very aware of that. But, there's a way to do it right, respectfully and safely. And while modes of communication have changed, we're all on Zoom, we're all on GoToMeeting now, what people really need from communication has not changed, which is transparency, clarity, and compassion. And this is especially true in philanthropy right now. Donors feel an interest to help the nonprofit organizations right now. But there are urgent midterm and long-term planning that should be done to spur and continue giving. So Amy is going to start with some immediate work that we can be doing.
Thank you so much, Kate. So as we know, during times like this, and also during the recession in 2008, that doesn't necessarily mean that people stop giving. It just means that they are going to give to fewer charities. So how do you make sure that your charity is in the top 3 or 5? You can do that by creating frequent, thoughtful, and meaningful outreach. Think about stewardship and what that means for your organization. And think about 3 things you can do to steward your donors. Maybe that looks like drafting a thank you letter from your board and having your board chair sign it and send out to your donors. Maybe that looks like highlighting volunteer heroes every week. Or maybe that looks like a behind the scenes tour of your facility. Really finding the champions within your organization makes your donors feel like insiders, makes them feel like they're VIP and that you are paying attention to them even during times of crisis. So I encourage you that your targeted communication to your base should be storytelling and really thinking about how that can leverage more fundraising in the future when you're ready to start asking. And when I say asking, I mean tangible items. So we know that understanding operating support for the general public can sometimes be overwhelming, and it's really not for everybody. And so I would challenge you to name the need. So whether that is asking your donors for beds or, hey, if you make a donation, it provides 3 nights of care for our individuals and the populations that we serve. I'm also going to challenge you to think about what was being discussed earlier in the CARES Act, is that donors, individuals that take the $300 above the line deduction, that's a tax benefit for next year. So when you're thinking about these tangible items, really think about, hey, what can I ask my donors for that's above the line, that $300 charitable deduction? Because really, the donor gets that tax benefit and you are getting an immediate need filled at your organization. So I hope that helps you think a little bit more deeply about what you can do in the immediate term to help engage your donors. And now Kate is going to talk about what you can do in the midterm.
So here are some midterm ideas for all of you. And I think a lot of you have already thought about these, but it's nice to kind of return to them. So engaging with the advisor population. has been a major shift for both Amy and I. We actually our experiences in frontline fundraising before we came to the Pittsburgh Foundation. And so now that we look back at our frontline fundraising experience, we wonder why we didn't utilize professional advisors more. So we're talking about estate attorneys, financial advisors, and CPAs. And not only do these professionals have high net worth clients that, it's great for a fundraiser to get in front of at some point, but even more importantly, they're incredibly knowledgeable and they can help you give you solid ideas that can be attractive to your prospects and your donor pool at your organization. So I'll give you an example of a conversation I had during this quarantine time. I work with several estate attorneys, but we have one that I'm very close to. We work with a lot of clients together, and I called him during this time, and I was kind of in a little bit of a panic, but I think this was only week 3, surprisingly. I said, Doug, I'm doing the best I can with what I have right now, but I need to bounce some ideas off you. I need to know, what am I missing? What am I not thinking about as far as opportunities for fundraising and engagement right now? And he said, Kate, it is an awesome time to think about the charitable lead trust. We're in a very low interest rate environment. This is something that you should be discussing with your donors and your prospects and putting information out for your base. Yes, I knew that the charitable lead trust would be a good idea, but he really gave me some fantastic examples and case studies that were very helpful to me in that moment. And so we were able to create content that we can disseminate to different individuals and start that conversation about how to really capitalize on the moment that we're in right now for charitable individuals. And we really feel, Amy and I, through all of our work, working with the financial advising community and the estates and trust and tax community, that we are helping the donor when we're at the table with those conversations to create the best types of gifts. And we are all looking for long-term benefits to fundraising at this point. Of course, we're looking for the right now, but it's also an opportunity to look at ahead and forward. And so researching and brushing up on different vehicles like the charitable lead trust, like the charitable gift annuity, and also having conversations on end of life. We are in an unprecedented health crisis, and it's causing more people to consider their mortality. And I know you've seen lots of articles recently, and this is an opportunity for fundraisers to be ready to have these types of conversations or even start them, and to make sure that donors and the things that they care about most, the work that you are doing in your organization, that they have the right documentation done and you have the right documentation done, so that when that gift comes to fruition, you know exactly what to do. I would give you a resource. Plan Giving in a Nutshell is a fantastic book. I know Amy's going to talk really quickly about a library for Plan Giving, but that's been a great resource to me. People are spending more time than ever with family. I think we're all very aware of that. We're in this boat too. And it's either in person or virtually. And so this is a great time to have these conversations with families about their highest ideals. I would also tell you too, the National Association of Charitable Gift Planners is actually having a webinar. I don't know the exact date. You'll want to look this up. It's called Talking About Death, Plan Giving and End of Life Planning. That might be helpful to you. And I think Amy's going to go on about the long term, and then we're going to get to Q&A.
Thank you, Kate. So we all know and recognize that our signature events have either been canceled or postponed, or they are now looking to move online for virtual experiences. So how do you keep the spirit of the event alive, and what tools can you use? And I'll give you an example. My sister is a Penn State alum, and they decided to do a virtual tailgate for their blue and white game earlier in the season. And what that meant was, you could sign up your group, and the coach and the team players could pop into your tailgate. And so it really kept that spirit of the tailgate alive. It just moved it online. And another example is, the Pittsburgh Foundation, our donor event got canceled. for the spring. And so we thought, okay, what can we do to make sure that we're giving information to our donors that they find helpful and useful? And how can we do that? And so we did a webinar about our emergency action fund. And it didn't really matter if we had 10 people show up to the webinar or 110 people. We were giving the donors the choice and the opportunity to join us or not. And I think that choice and control is something that none of us really feel like we have right now. And so even just giving them that little bit can really help deepen that engagement with them. And I know everybody, they see data mining and you get all clammy, but really this is a great time to really look at your data, look inward, see who you can make plans for and move them through the pipeline. So creating a strategy for as many donors as you can is really going to help you think through those long-term goals with them. And like Kate mentioned, having an up-to-date plan giving library and plan giving strategy, this is a great time to think about that. One thing that we have heard multiple times from state attorneys is that nonprofits really need to make sure that all of their information is up to date on their websites. Because if one of their clients passes away and has left bequests to your organization in their estate documents and they don't know who to contact, that just delays the gift coming into your org. So I would highly encourage everybody to take a look and take stock of what information you have online and get all that up to date. The last thing is professional development. Like Kate said, the National Association of Charitable Gift Planners are hosting webinars. There are many different ways that you can continue your own professional development. Maybe think about getting a chartered advisor in philanthropy designation. Think about training in areas like relationship management or public speaking. What are some things that you have been putting off because you've just been so busy that now you can actually take the time to hone in those skills so that you can better steward and connect with your donors? So I know that we are getting close to time, and I want to make sure that you all know that you can reach out to Kate and I at any time. Look us up on the internet, reach out to Joe. We'd be happy to answer questions that we didn't get to today, but I'll move on to Joe for Q&A.
Thank you, Amy. And we did receive a few questions during the presentation. So the first one, Jeff, is actually going to be directed to you. In regards to the PPP loans, has the SBA provided any further guidance on paying bonuses to employees to maximize the forgivable amount?
Thanks, Jeff. I want to also just thank Laurie and Kate and Amy for their great presentations. But as of right now, SBA has given very little guidance on bonuses or increases in pay. There's obviously, as I mentioned, there's factors to decreasing pay. Our kind of thoughts right now are they do have the $100,000 cap on wages set up. So we're feeling that there probably won't be any additional restrictions on increasing compensation, but that's still up for a little, hopefully clarification from SBA and Treasury. But as of right now, we don't think there's going to be an issue in paying some type of return to work bonus or almost a hazard duty pay to get people back. In addition, our governor in Pennsylvania has made it pretty clear, that he feels that we should be paying people more to get them off of unemployment. So again, we have that maybe to rely on a little bit, but as of right now, there's no clear guidance on increases in wages.
The next question is probably a bit of a hybrid. So I'm going to maybe kick it off with Laurie and then have Amy and Kate provide insight. Laurie, or as a nonprofit board member, and just from your perspective, if a nonprofit has to change their service model or their business operations, what insight could you provide? And then after you're done, Kate and Amy, if you could provide insight on how that would maybe impact fundraising, that would be great.
So what we kind of talk to people about through all of this is when they have to pivot or change, make sure they're communicating that to their stakeholders. So, some nonprofits that couldn't perform their service because it was in person and it couldn't be done, had to completely shut down because of that. Or some of them have changed, and we're doing things for other organizations to help. And so, what I try to talk to my nonprofits about is making sure that they're not duplicating other people's efforts, make sure that it's relevant. And I think what we saw was a lot of nonprofits jumping in to help where they needed to. So, our United Way here, normally would be giving money to our partner agencies. Instead, they were working to raise funds to donate to food shelters and to coordinate the care or the needs of our community. So I think it's, making sure that you understand what the need is and then figure out how you can be a part of that and still keep true to your mission and goals of the organization.
This is Kate. I would say that, this might be a great opportunity to ask questions of your donor base and ask what they want and need throughout that kind of shift. So, you could survey the top 20 donors that you have and ask them 3 questions. What do you need to know about the work that we are doing and the changes we're making? How would you like to be communicated with? How often? And then also, which of the following opportunities are the most interest to you to give back to from a fundraising perspective? And gather that information, and then you'll be able to, I think, at least start to craft a plan for, maybe some gift asks that make sense for the population that you're going to be asking.
And we do have one more final question in queue. And I guess I'll send it over to Amy, but Kate, feel free to add insight as well. Amy, I think there's something we are all struggling with. With email fatigue, the webinars we're even holding, a lot of people are getting digital communications, and we don't know how the health crisis is going to unfold. Do you have any concerns or advice if this continues into the fall, how to manage all the digital communications that people are sending out?
Joe and team, that is a great question. I agree. I think that by the end of the day, we are all screened out and zoomed out. And I think that really the biggest thing that we can do as folks that are fundraising for our organizations is be honest, be transparent, be upfront. Say, hey, we understand that, this is the situation, this is what it is, but you are important to us, and this is why. And we feel that, this is the best way that we can continue to communicate with you. But to Kate's point, maybe survey them, maybe see, gauge how they want to be communicated with, and that will help you decide how you want to move forward. But I think that honesty and transparency in those situations are just the best. We're all human, and we're all doing the best that we can.
And thank you once again to all of our presenters. At this point, we do not have any more questions in the chat. So with that, I am going to turn it over to Ed to sign off the webinar.
Thanks, Joe, and thanks to all our presenters, Laurie, Amy, and Kate, and Jeff. And please remember, if you have any questions, as most of the presenters have stated, please reach out to us. We wish you well during this challenging time. And as you go forward, I think some of the takeaways that were presented were, really engage with your donor community, look at your service provisions, and use the assets available to you, and mostly from a board perspective. Those are the people that know you the best. Those are the people that can help you with the greatest guidance. So everybody, please stay safe, and we look forward to hopefully meeting in person sometime soon. Thank you.